All right, it's Wednesday, July 5th. This is an end of the day SPY recap, and today we end up with kind of a two down failure bar where we kind of took out the lows of the previous day, but we closed green. So that kind of keeps our up bias intact, continuing to expect higher prices sometime this week. First of all, we have the weekly chart from last week, which is strongly green, so we're looking to take out those highs at some point until proven otherwise. The first bar on Monday, the half-day trading, was an inside bar. We gapped down big, and we sort of had a bit of conflict at the open, given that, you could see here the pre-market range between the blue lines. We were gapping near the lows, but we immediately started up very strong. But at this point, we were still kind of below the halfway point of the prior day. So if you wanted to aggressively kind of jump in here, you didn't know for sure whether you're going to reach the half point of that day to kind of give you that inside bar failure that I often talk about. When I see an inside bar, I like to see failures of breakouts up or down. And we were starting to develop that, but yet we weren't there yet. So it was a little tricky to know what to do. Nevertheless, you had about an hour and a half of follow through to the upside, kind of towards yesterday's close and the midpoint of yesterday. At that point, you kind of assumed the trend for the day was up, but then what happened was you had Fed minutes being announced at 1 o'clock, so you knew you were going to get a little volatility there. So this first orderly pullback, which you're looking to buy at that point, it's kind of orderly, holding the midpoint of the prior bar. You didn't really get any good signal. This was kind of an inside green bar. You didn't know what was happening. Then right around here was 1 o'clock. You're getting that Fed minutes. So it's not surprising that the Fed, after the announcement, you got that volatility. I often talk about how on the way up with the algorithmic trading, price likes to take out stops on the shorter time frame. So we went up a little bit, then we came down, we took out those stops, and then we immediately got the two up reversal. You could have kind of tried a long trade there if you expected those highs of the day maybe to be reached after that volatility. We went up for 45 minutes, and then it didn't really reach that target, and you could have kind of broken even at the worst. And it was just a tricky day to trade given the SPY, given the conflict at the open, up open, below the midpoint of the prior day, Fed minutes coming up, and everything else. But anyway, so it sets us up nicely for tomorrow, where we have the green line here. That's the open of the week. So as long as we stay above there, we can stay green. We're expecting higher. So we'll see how the open happens tomorrow. If somehow we gap down below the midpoint of that day, then we do have the potential for a continued pullback, but we'll just have to see now. With this bar in play, we got the midpoint of this bar. We have the green line, which is near the midpoint, and we can kind of see where the opening range is and where opening price action takes us tomorrow. Again, expecting higher, still want to follow through, but we still know we have this gap to fill on the downside. So again, it's a little tricky, but you just got to kind of follow the various components here, how we open relative to the midpoint of the prior day and the pre-market range, and how price then opens. And often that guides you where price wants to go first, either up or down. So we'll see tomorrow with 2 days left to go in the week, where price goes, with the expectations, that it does at some point try to push higher.